Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. We can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good morning, everybody. Sorry, I didn't have my microphone ready there. It is another week, and you know what? This week, I think is kind of going to be aftermath because we had so much macro data and everything. Now is the time to kind of digest things about where we are and kind of see if it's actually reasonable or not. We got a bunch of treasury auctions this week as well, so that I think it's going to tell us a lot about the... Oh my gosh, I'm playing the wrong song here. I think that the auctions will tell us a lot about like what the actual demand is there in the market and where some of the selling had come from. So let's just take a quick look at where we're at here on the charts. You can see here, pretty big update in the treasuries, but they gave a lot of that back and we are just like right at that moving average. Man, when you look at it on the volume profile, it's just like amazing. Now we are kind of like in no man's land here on the single prints, so we advise that it goes all the way down to 24. S&P 500, of course, big up day, holding the gains. I think that equities are very likely to remain bullish going into the year end. Here we have oil actually not affected that much by it all, and actually down on Friday with a little bit of a rise. I think that oil will probably come along eventually. Now we got silver and gold. Well, they've kind of been volatile all over. They were briefly above 2,000 for a bit, but gold seems to be unable to hold that 2,000 level. Kappa is doing okay despite some disappointing Chinese macro data the past few days, but it's looking a little bit better over there. And then let's come over to our currencies. We got the dollar here down below 105 now, so down $1.50. That's a pretty big move. And Bitcoin, well, Bitcoin's kind of trugging along here. Again, I think that a lot of what pushed Bitcoin up was kind of more speculation, and so some of these moves in the dollar that you would have thought could move the dollar haven't really moved the needle for them much, if at all. So, well, that's where we're at. It is a Monday, so Mondays tend to be a little bit more constrained, but if a trend gets going, those can be some of the biggest trends. So there's kind of that Jekyll and Hyde behavior, but I'm expecting volatility overall. So especially in the equities, my understanding is that they are now long gamma, which means that tends to reduce volatility. So you're going to see much different behavior this week and today than you have for the last like month and a half, because we're back into volatility should be decreasing. But you are seeing the treasuries, at least initially here on the downside. There is a bit of liquidity here on the bid though, so it might be looking for a reversal here. But so far, well, I take that back because there has been a decent amount. In fact, let's see here, we were at like 46 when at the top of the hour. Then when we go to like the last 15 minutes, we're at 34k in cumulative delta. Now we're at 15k. So there is actually a pretty substantial amount of selling and activity here. Now that's interesting. I'll take a picture of that and post it in. You know what? We need to come up with a different, a better name for cumulative delta. I think it's just too hard to say, too long to type out. isn't really descriptive of what we're actually talking about, which is like net change in volume. Maybe I should just say in market orders. We've had a pretty substantial move in market orders. So you're short makes sense. I mean, maybe if I had been in earlier, maybe I would have gone short. I don't know. I'm always a little hesitant to do something on a Friday, though, or on a Monday, right? Mondays and Fridays, kind of not my best days. When I started the stream, it was playing this drum and bass song, and I really like that drum and bass song. But alas, we can't use it with fair use. Yeah, that amount of liquidity at 29, at least for the recent past, is pretty big, isn't it? It used to be that there would be 8K on both sides of the extremes, basically always, but it's been a lot less as of late, hasn't it? Oh dear, 7th Circuit holds that AR-15s aren't protected by the Second Amendment. Yeah, I don't think that one's gonna last. The 7th Circuit consists of a Reagan appointee, a Clinton appointee, and a Trump appointee, and only the latter supported the trial court. Wow. What was their logic? The Heller decision said that arms meant to be protected under the Second Amendment were those that were not dedicated solely to military use, but were the type that ordinary citizens would ordinarily have. To that end, the court held that Second Amendment does not protect those weapons not typically possessed by law-abiding citizens for lawful purposes. America's law-abiding citizens own around 20 million AR-15s, which they use for law-abiding purposes. So, you're in a country of 30 million people, 300 million people, and there's about 20 million AR-15s? Wow. So maybe like 7% of people own an AR-15? Really? I feel left out now. Maybe I need to go get one. Court held that an AR-15 is essentially an M16, making it a weapon. I don't think that will hold up. Well, of course, the Supreme Court will probably smack it down, right? But I also just don't think that their logic is really very sound there. Most of all because I don't think that Heller held that it's only for weapons that were not dedicated solely to military use. I don't think it said that, but I have to go and read, I guess, double check that. Well, that's the top story on Zero Hedge this morning. Let's go around elsewhere. Oh boy. One of the top stories on Hot Air is early voting is unconstitutional. Let's see what their Americans now vote across election quarter. Oh, that's funny. Oh, let's see here. Brando, what's the deal with Rust? I code in Python and R, and I've heard some small bits about Rust. Mm-hmm. So, how are you taking the news that, well, I mean, I think that we kind of had determined that that was what was happening a long time ago, right? It was like, it was looking good, it was looking really good, and then all of a sudden it was kind of like, no. Because, like, they broke through that first line of defense and then the second line of defenses, and then we never heard anything again, right? And I think at that point it was pretty much, yeah, the offensive essentially failed. Now, on the peace negotiations thing, I don't know enough about the situation over there to know if it's really, because I'm still of the mind that I think could be potentially very dangerous to just appease Russia, right? To say, like, oh, okay, we'll just sign a deal and you get to keep all of that now. Because it kind of legitimizes that kind of aggression, right? And it's kind of been a piecemeal thing, right? Like, remember they moved into Georgia, and like they've been moving on this for a while. And I don't think that they're going to stop. I think that eventually they want all of these Baltic countries. And you got to understand, again, that it's very ideological for them, right? All this stuff about, well, if you bring Ukraine in and they consider them under their sphere of influence, then of course they're going to react. And that's all a nonsense justification for what is essentially an almost imperialist kind of conservative attitude back home that is really quite scary if these guys were to go all the way through with what they want to do. So I don't know if you necessarily sign a peace deal. That's kind of the thing that I don't know. Like, what would be the advantage of doing that versus just keeping the lines and having something similar to what we have in South Korea? You know? Like a war that basically just never actually ended, but kind of did, you know? Why wouldn't they do that? I don't understand the difference. I also wouldn't completely discount the possibility that they try again next year. I don't know. Oh, well, a lot of people died in the Ukraine war. I think that the Russians probably lost more, but I think the bigger picture here is that I simply do not buy this shtick that I see on the kind of like the far and libertarian right, let's call it, that if the United States just holds back and never does anything foreign and abroad, that everything would just be hunky dory and great. And that's just not true for two reasons. One is because there are actual real serious threats out there that if you allow them to grow would be a super, okay, like if Iran was allowed to just go crazy and take over the entire Middle East, because frankly they would if they could, and create like or like ISIS, you know, they want to create a new what do they call it, caliphate, want to create a new caliphate over there, okay, that would not be good for United States security. Okay, these people hate us, they are going to attack and kill people and do terrorist attacks regardless of what you're doing with your foreign policy. But the second thing is that you know, there are allies that are threatened. For instance, these Eastern Bloc countries, right? You have all these Eastern Bloc countries that are kind of relying on the United States to protect them from Russia because they know that these zealots in Russia want to come over and take over those countries, and they would if they could, right? If the United, like, quite frankly, if the United States was not sitting there with missile batteries and NATO and all of this other stuff protecting those, you know, Eastern Bloc countries, Russia would already have moved in. They would. Okay. So because of those relationships, we're protecting people, but because of those relationships, that is a major source of American prosperity. That's what keeps the shipping lanes open and creates the deals and stuff that gets the cash flowing. And so if we were to just abandon our responsibilities worldwide and allow Russia to come into Ukraine unimpeded, right? So because I think that what some people wanted was Russia was attacking Ukraine, and we should have just not given Ukraine any money, shouldn't have done anything, just sat and watched and let Russia take over Kiev. That would have been absolutely disastrous for U.S. foreign policy and the West as a whole, because now nobody can trust you. It's everyone for themselves. It would be very, very bad. So you have to have that. But the question after that, the more serious question is, what kind of support is reasonable, right? Because as the United States, we have the ability to fight a full-on war with Russia and win. We could, but we don't really want to, right? It's not really in our interest to have a full-blown conflict, you know what I mean? And the American public just doesn't seem to have the appetite for it, right? Which is kind of a problem. We're not going to continue to dump millions, or at least we don't want to dump millions and millions of dollars into it in debt to keep that thing going. I mean, that's what we did with Iraq and everything, and everybody hated it. And I think that everyone was kind of, you know, despite how terrible us leaving was and everything, I think that people are kind of happy that we don't have commitments like that anymore. Okay, so yes, that's true. At least my understanding, and I think that some of these reports are kind of a little bit like, they're not like superficial reports. They're kind of like, you know, we've got the inside information kind of reports. But my understanding is that Zelensky did want to negotiate at least twice, but the US, UK, and US urged him not to. But to that point, what would have been different? You think that they would have had slightly more territory or something? Like, Probably not. And I guess the other thing is we can't say that we, the West, are little angels in this situation, right? Because to some extent, we've wanted to have a reason to weaken Russia because we didn't like the way that those things were going, and we got it. And to some extent, we're kind of coming in and saying, well, yeah, we know that we're going to lose like some territory, but as long as we can stick it to Russia and basically keep Russia poor for another 2 generations, that's fine. Like, that is a real thing, right? Because Russia, they threw so many kids into that meat grinder, man. And Russia already had demographic problems, right? Russia did very much damage its long-term prosperity by conducting this war. And the U.S. foreign policy establishment is absolutely ecstatic about it. Kind of messed up, isn't it? But, you know, that's international politics for you, right? Like, I think that a lot of the time, well, okay, let me put it this way. Like, let's switch over to the conflict with Palestine, right? Hamas knows that they can't win, right? Israel has the ability to vaporize the entire strip if they wanted to, okay? This is why I think it's funny when they're like, you know, the Israelis are genocidal, the Israelis are conducting an apartheid, etc., etc. Listen, Israel has nuclear weapons. It's not an official thing, but there's been nuclear tests detected and like nobody claimed them. We're pretty sure it's Israel. The way that certain people have talked and things like that, I'm 100% positive that Israel has nuclear weapons. So they could drop a nuke on Gaza, and they probably have like these tactical nukes and things like that. Yeah, they could kill everybody in Gaza if they wanted to. That's not really their interest, okay? They just want to defeat Hamas and not have a terrorist nation next to them anymore, right? Well, it's funny to me that people don't think that the U.S. won an Israeli-Palestinian conflict. Well, okay. Anyways, my point, though, Gaza cannot win, okay? Like Hamas literally cannot win because Israel has the ability to erase them off the face of the earth if they chose to, right? So the only option that Hamas actually has is to convince Israel and its partners in the West that they don't actually want to win. That's really their whole strategy has to turn into make people feel bad enough for us that they stop it. Essentially, I say that sometimes it just comes down to a diametric battle between opposing ideologies. That's just the way that it comes down. And when that happens, you win. Go and win. It bothers me so much that the West has lost its resolve to win things. Go and win things, because otherwise it's just going to be more people, more decades of terrorism and awfulness. They have the opportunity to go in and win and defeat Hamas once and for all, and maybe possibly turn Gaza into a nice place for once. Okay, that doesn't make sense. Why did Hamas attack Israel then? Well, so I believe that Hamas believed that, or rather, the reasoning that we've been given in the media is that Hamas believed that other players would get involved. They thought that it would be Hamas and Hezbollah from the north, and that like maybe even Iran would get involved. They thought that all of these countries around would attack Israel again. And if the whole Muslim world united and pushed at the same time, that could have weakened Israel and perhaps forced some territory gains or like moved some things in their direction. That's what they believed. And there's even some interviews with some Hamas leaders basically stating that they did not expect this to go the way that they did. Not that they didn't expect Israel to strike back, but the biggest thing is they did not expect the United States to go and place 2 or 3 carrier groups in the Mediterranean to deter any kind of other parties from trying to get involved. And so that's why it didn't go the way that Hamas wanted. Is Israel a generation away from losing majority public support in the United States? Yeah, you might be right. Because the kids seem to be firmly against Israel, which is just absolutely crazy. I do believe that Israel genuinely wants the conflict to end. Okay. And I don't think that the United States wants it to keep going. But there are but that's kind of like, there's like what people want, and then there's like what people do, right? Yeah, are there like perverse incentives to keep things going? There are. And so some people may not necessarily act in accordance with what they actually believe because, they have these other incentives and their subconscious pushes them towards those incentives, and they do it without even realizing it. Like that's the crazy. It's one of the things that I think is like really astounding to me is that you really will have people that are good people, believe that they are good people, believe like what is the right and wrong thing, and will still end up doing the wrong thing and justify it in their heads because it's like what benefits them. And it's almost like an unconscious bias that happens. So that could keep things going. But I tell you what, like Hamas gets rich off of this shit. Like the leaders of Hamas, they have gotten rich off of this stuff. So that's pretty crazy because they put, there was foreign aid to billions of dollars that the world spent to kind of help the humanitarian disaster in Gaza. And they just turned it all into terrorism. They filtered it all towards terrorism and lining their own pockets, of course, because they live in Qatar and Netanyahu had internal problems, and with this incident, both money came from America and internal disputes were resolved. Okay, so that's correct, but I think that you're kind of the implication or assumption that you're making there is that, Netanyahu wanted this to happen. So first of all, I don't think that was really the case. I reject the conspiracy theory that like Israel knew and let it happen. Okay. But then the other thing about this is things are not all hunky-dory with politics in Israel. My understanding is that once they resolve this particular thing, that it's very likely that Netanyahu goes. So, of course, you might get somebody even more, shall we say, right-wing than Netanyahu. We'll see. Well, I find the movement in the treasuries here this morning a little curious. I mean, just because there was so much selling volume when we came in here at the start, but it is acting like a normal Monday, so I don't know what the deal is with that. On the other hand, let's get. Well, no, we could keep talking about that, but I've kind of segued to a bunch of different things to try and make a point. And what was my point? My point is that there's reasons to win, and I wish that the West would strengthen their resolve and win in situations where there's a good reason for us to do so, and to stop feeling bad about our enemies and just go and get shit done. Okay, because the world would be a better place if we had that kind of resolve. Okay, but you're all very absolutely cynical, and I get it, because that's the way it's been your whole life. But there can be peace in the Middle East. It can happen, or at the very least, we can get rid of the terrorism. I was watching Attack on Titan. There was the final thing of Attack on Titan was out, so I watched that last night. And I might have missed a few things at the end because my son was just throwing absolute fits about everything. It's like you get into YouTube, and then he wants to change the video, or it goes into something that he doesn't expect or whatever, and then he screams so loud, and so I look away, and maybe I missed a sentence or something like that, but oh my gosh, so annoying. But spoiler alert, at the very end they get rid of all of Titans, but that doesn't fix everything. And eventually in the credit scenes they show that Eldia gets invaded and or gets destroyed by a nuclear bomb, I think it was, and then the people in the aftermath are going through the rubble, and a kid comes across a tree that looks much like the tree that Ymir found that started the whole thing. So, and that tree was where Eren was buried, so it actually doesn't end. Yeah, just never ends. Yeah, so the very much the opinion of Attack on Titan was that this kind of conflict is part and parcel of human life and will never end, I think. Which there are some things about human nature that because the left is a lot of what separates left and right is the left believes that people are essentially good, and that given the right system that we can perfect things and we'll live in utopia. And the right says is more of a realist approach, that people have problems, and some of these problems will just always have to deal with them, right? And so you can see it at almost every step, right? The left thinks, oh, well, if you, there are maybe certain minorities that are more involved in crime and causing more problems in society right now, and that's just because they're disadvantaged. And if we're nice enough to them and build them up enough, then that crime will just go away eventually. Well, so there is something to if you increase economic prosperity and independence, that people will commit less crime. That's for sure. But there are some problems that will always be there. And, I think that utopia, let me tell you something, someday God will come and he will reign on the earth for a million years, or 1,000 years, 1,000 years, right? And during that time, I think that there will still be people that will have struggles and we'll have to deal with them. It does, humans are inherently imperfect. That's kind of part of this life. So there are some problems that just never go away. You think it's genetics? I don't have to see any support for that, but I think that here in the United States, where we have certain minorities that are more involved in crime, I think that is largely a cultural issue, because when you go and you look at immigrants that come over that are of the same races, you don't see those same problems. And the sad thing, if Thomas Sowell is to believe, is that those people actually picked it up from white people. That it's actually trashy white people culture that's the problem. And I would tend to agree with that, actually. I saw one of your funded videos and surprised you were streaming. Which one are you talking about? The videos where I was basically like, here's what I did, and I kind of give up on trying to do a funded trader program? No, I have affiliate links in the video description for the news squawk and for the software that I use, but I have it specifically made the decision to not support and or have any kind of affiliate links for any of the funded trader programs. Yeah. like the thing is that for a long time I was like, okay, I can do this, and then I realized that the rules and everything were actually making the problems, and that for the long-term consistency that I wanted, I needed to just not do those programs. But then after that, the micro yield futures came out, and the micro futures, not just the micro yields, but micro ES, all of those, right? And I really, with micro futures, there is just no reason to do the funded trader programs. There really isn't. And unless you are like a really experienced trader, you've been trading your own account for a while and you just need a bigger account, or you have a strategy that is kind of risky, right? But otherwise, there's no reason to do it. So that was one of the big, and then there was a little bit of drama with like some funded trader programs. Was one of them was basically founded by a scammer, right? So there was that whole thing that really hurt them. And then there's been this whole thing, like there's been some where people find out that once you get funded, they're not actually having you trade live. It's just you're trading sim, and they'll pay out to you if you are successful on their sim. I was just like, you know what? I don't want to be involved in that space, so I've gotten out of it. These are still well, I mean, if you really want to like quote unquote market make, I'm a little skeptical about there really being opportunity. Maybe if you live in a developing country where the markets are still developing, places that I don't have access to, it might make sense. But I'm not so sure that there's really anywhere in the US that's not taken over by robots, It might be a catch for their firms. Yeah, and I mean, the thing is you'd have to be not just only profitable, but fitting their parameters, right? Because the amount of money that they want you to make is pretty aggressive, right? Sorry, I can't see sometimes this little like button covers up your comments, so I can't see your. My personal account is with EdgeClear. Do you use Ninja? Okay, so I'm doing a really weird setup. I'm kind of trying to move away from the setup just because I don't feel like that this setup is really appropriate for most traders, and it's a little bit complicated, and I would like to have a setup that people go, oh, I would like to use exactly what Seth does, and it's easy to set up, okay? But what I do is I have EdgeClear, and my data provider is Rhythmic. Now, with Rhythmic, there is a feature called plugin mode, which basically allows the data to get piped to other applications, and the only requirement for an application to be able to do that is it needs to be on the .NET framework. So basically, if the program is C#, then they can use this plugin mode, right? So Jigsaw is written in C#, so it can connect with the plugin mode, and NinjaTrader is written in C#, so it can connect with the plugin mode. Now, big caveat. The newest version of NinjaTrader does not allow you to do this anymore. So the version that I have, I can connect to Rhythmic with the plugin mode if I am using a demo license. If I'm using my free license from many years ago, so I don't know if the newest licenses do this, but if I use my free license from many years ago, it allows me to use that Rhythmic. If I use the developer license that they gave me for being a part of the NinjaTrader ecosystem, then that one does not allow it. It has Rhythmic for NinjaTrader brokerage, but ever since NinjaTrader brokerage moved over to being their own clearing firm, they don't support Rhythmic. So there was no way to use that anymore. Right? So if you're with EdgeClear and you're using like the older, because right now they release both. There's like NinjaTrader 8.1 and then there's NinjaTrader 8.0 blah blah blah. And if you're using the 8.0 blah blah blah, then you might be able to do what I'm doing. Right. Otherwise you basically, to really trade with NinjaTrader, you have to use their brokerage, which, you know, I didn't really enjoy being on their brokerage. Most of the challenges that made 2 to 3 day requirement from at least being 7 to 10 days, I think that the best reverse scam they could have pulled. Traders think it's good for them, but it's, oh geez. Why so? Well, so I don't know why you said why so I'm just going to assume that I know what you're saying why so about and go into that. NinjaTrader brokerage has their own clearing firm, and they want you to use the brokerage. And so a good portion of their business is now using their brokerage. And so they basically shifted their whole ecosystem into pushing you into going into their ecosystem. So it's not my favorite. I prefer, you know, an open system where I can pick which data provider I want. I can pick which software I want. I can pick which broker I want. And on all of those levels, you can compete, you know? Why weren't you happy with NinjaTrader 8? Okay, so to be honest with you, I forget a lot. But this was like a year and a half ago. But one thing that happened that really bothered me was when the micro yield futures came out, I had to argue with them to enable it on my account. They said, this is like a new instrument. It's dangerous to trade and we're not going to let our people trade it. And I'm like, it's $1 a tick. The most I can lose is like $50 in an account that's much larger than that. I understand the risk, but the thing that really pissed me off about it was like, okay, if you guys aren't allowing us to trade it and AMP isn't allowing us to trade it, then who's gonna trade the instrument? And it was like that when it started out. You can go, I don't know what day it was, but you can go back and look at like the day that it launched and watch the stream. Well, I'm sitting there like texting with them to enable it and everything. And I was basically like the first person to put in a market order because like the market makers were there, but nobody could trade it. And so I came in and I took an order and I was the first one to get it started. That really rubbed me the wrong way because it was like, man, even the people that are like involved on the risk side do not like know what's going on, don't know that these micro yield futures, which are specifically for your kind of clients, is going, and you didn't prepare at all. And then once it was enabled, like all of the settings for it were messed up and everything. Like they didn't have the tick settings correct, so they had to release an update to fix the tick settings. And that wasn't the only time that I had problems. And basically, there was 2 or 3 situations where, because of issues with the NinjaTrader platform, with the NinjaTrader brokerage rather, I missed really good trades. And I just, not only that, but the data that you get through Continuum wasn't as good. didn't and the setup that I had to use was convoluted because I had to do like the NinjaTrader bridge and all this other. And then because of the NinjaTrader bridge, there are features of Jigsaw that you can't use, like their charts and stuff like that. So I was really frustrated with NinjaTrader brokerage the whole time. Now, I'm not going to say that like NinjaTrader brokerage is a terrible brokerage and you shouldn't use it. I'm just saying that for me and what I was doing, NinjaTrader brokerage was not, a very good fit for me. And EdgeClear has been, right? If I'm talking to the guys from EdgeClear, they know what's going on, right? If we wanted to do something, I could talk to them and we have a relationship that we could do like a combined thing. Like I think something that could happen in the future, honestly, one of my ideas is we could start a commodities trading pool, and we could make it like a combined account of sorts. So I can be like, okay, here's 5 of you that have gotten your Series 3 and that I've seen your long-term performance and I'm okay with you trading, and then we can go in and we can say, based on what's going on today, we're going to allocate this, you can trade this much and you can trade this much and all of that, and run a commodities trading pool like that. And I could probably do that sort of a thing with EdgeClear, right? So, yeah, I really like them. Is Iron Beam cheaper? Well, so commissions wise, I'm not sure. I wouldn't be surprised that Iron Beam might be a little bit cheaper. One of the cool things with Iron Beam is that if you use their Iron Beam app, I forget what it's called, but if you use their Iron Beam app, you get their whole platform and data for free, essentially. Although I think you still have to pay like the CME data fees. But like it's all encompassing. And so Iron Beam is probably the fastest way to get started. That's why when I made my beginners video, because Iron Beam, they wanted to do a partnership sort of a thing. And I said, well, we should do it for the beginner video because their platform is the easiest to get started. And the DOM that they have on there, that you can use it on your phone, it's pretty impressive for what you can do on the phone. Now, I wouldn't say that their platform sucks. I would say it's sufficient. There's sufficient, and then there's good, and then there's like God tier amazing, right? Like Trading Technologies is like God tier amazing, some of the stuff that they've got on their platform. I think that Jigsaw is kind of on the edge between like God tier and pretty darn good. But that's because Jigsaw is always doing new things, even though they've slowed down the past 2 years, man. They've really slowed down, but I think they're getting there. Their last update was pretty good. When the updates that they do release for Jigsaw are great. Giancarlo, I haven't spoken with him. Anyways, yeah. When I was with NinjaTrader brokerage, I basically talked about leaving them almost every day, so I did it. I did it, and now I never think about it, right? And that's the way it should be, right? Like if you are thinking about your broker a lot, you're probably with the wrong broker. Because that's what sucks so much about being an IB, about being an introducing broker, is that if you're doing your job and you're really providing value to people, they don't notice. They don't even think about you, which makes it really hard for you to make money, right? But yeah, EdgeClear has been great. We pushing down a little. Oh, I missed that like plunge to new lows while we were talking about that. Did I miss a piece of news here? Let me come in here and check. I don't think that decline was too huge. I guess it was probably only like an additional 2 ticks, but it went from like 31 all the way down here in less than 2 minutes. So, Putin has decided to run in the March 2024 election. Well, that kind of contradicts all these people out there that have been saying that Putin is actually dead.
The Treasury yields extending their climb, which is pairing Friday's gang.
Oh dear. And that was it just playing over the... Okay, so let me do that. That should fix that. Do we have a holiday? I don't think that it's a holiday market, but I think what's happening is this. You had a pretty big week last week, and now is the point where it is like the first kind of pause after that, where it's like, okay, well, now what? And on top of that, the change that we had last week where equities turned very bullish and interest rates kind of backed off, is very much something that would lead to decreased volatility. And looking at the flow reports that I read this morning, I spent a long time in the shower reading all of these reports. We are long gamma now, which means short volatility. It is also, it is the first day after daylight savings time, and the market always kind of seems to have a hangover after daylight savings time. And it's election day tomorrow, right? I don't know if that's really a huge deal. Mm-hmm. Tuesday, January 9th. Oh, wait. Tuesday, November 7th. Yes, it is supposed to be tomorrow. We just don't change time here, so market is usually... Well, but look at my time. I don't know. I started my stream at the same time as it, so I mean, it is open. Like, here's the thing. Listen, don't just dismiss... Excuse me. News Squawk saying something. I wouldn't just dismiss the whole thing that I said about volatility and all of that stuff. Because look at the chart here. Look at the 10-year. Just in this most recent stuff, right? Starting from about 30 minutes before the market open, we saw a solid 30,000 or so net selling in the treasury. So there was actually a lot of activity, but you can see how much volatility have contracted. That didn't result in that insane of a move. And the action has been pretty lackluster. Now, this move right here, that was from 20 to 10. So that was another 10,000 contracts. So, like, the volume is there, but the volatility is down. And I think that over the next few weeks, you're likely to start seeing that a lot. Decreased volatility, even though the activity is there. Which I would say is generally good for us, yeah? I deposited EdClear and they have me on the Iron Beam network, and I think it's because I told them I plan to use Denali. I don't know anything about the doing it with Sierra charts. This is, again, like the thing that I don't like about Sierra charts, like the biggest thing that I don't like about Sierra charts is that is kind of the same thing that I don't like about NinjaTrader anymore, is that they're kind of trying to create their own closed ecosystem. And, you know, NinjaTrader used to be the best for being an open ecosystem, and they've moved away from it, which I really don't like. You know, when I started doing this, it was a very open ecosystem. But that's the other thing that I think is really interesting, is that if futures require a little bit of investment at the beginning. So some of the decisions that you make at the beginning could potentially lock you in to things, right? It'd be very difficult for me to justify moving to a platform outside of Jigsaw, for instance. Well, it works flawlessly. Yeah, I mean, there are some advantages to... So here's my argument for why you want to open, okay? Because, yeah, you get software... There are certain advantages to it being closed, because you can kind of get better, more consistent software that way. Because just being an introducing broker is kind of difficult. Just being a platform developer is kind of difficult. But when you have it all packaged together, that's the moneymaker. But one of the big things here is that the markets are constantly evolving, and you want to be on the cutting edge. And so having platforms that are like introducing new things, you know, that's a big benefit. Or, you know, like the biggest benefit of NinjaTrader 8 is that so many indicators are created for it. So whatever is going on, whatever new stuff people have found, you can go and try it and verify it and so forth. I don't think that CR Charts it's not like CR Charts is terrible in that respect, but it's just not as good at that as its alternatives. And that is an important enough factor that, you know, that's why I trend towards the other platforms. It's kind of funny because I think that a lot of people moved towards Sierra Charts in the beginning because it appeared cheaper. It doesn't really seem cheaper anymore, does it? I wouldn't be surprised to see the Denali data feed be better than Rhythmic, yeah. I've heard a lot of really good things about the Denali feed. One of the things is that I think that the brokers have like tiers. So one of the things that you got to realize about the infrastructure side is that everything is in the cloud now. Everything is clouds. And so basically what they can do is they can shift processing power around, right? So they can, like, for Rhythmic, it's the API customers, right? Because that's a lot, like $100 a month. Okay, so if you're an API customer, you're going to be like, get precedence. So they're going to say, make sure that there's always enough resources for the API people. And if we're in a situation where we can't service everybody, I'm going to make sure that my API people are still getting data. And if anybody gets a service disruption, it's going to be the people on the simulator accounts or the simulator connections. Right? Because I've done it times where I had both my personal account. I've done one because somebody paid us. If I'm not going to do affiliate links, but if a funded trader program wants to do a sponsored video, I'll do it. So we did a sponsored video where we did a combine or whatever it was. And so I had both my Rhythmic data feed and their demo Rhythmic feed. And yeah, my feed would be fine and the demo one would have disruptions. And this was during the time when like Trump was tweeting stuff and it would create like insane moves because of that stuff, right? So yeah, there's kind of tiers to it. I don't know. For a lot of people, like $50 a month for your platform is too much for them. In fact, I would say for most people. That's that video where Sear Charts was compared to Jigsaw and it lagged behind. Well, so let me tell you something else. Okay, if you're watching two feeds next to each other, during normal market conditions, and one feed is anything more than like a frame ahead of the other, there's probably something wrong. But something that you can see is there are changes happening on the liquidity and all of that all the time. In fact, some of it is so extreme that all of the data providers just filter it out. So sometimes what you might see is there might be a change at one price and a change at another price, and you'll receive them in a different order based on which feature you're using. It's kind of a weird thing because of just the differences in how they filter and stuff. But then the question is, learning Sierra charts is like a part-time job in and of itself? I found it very frustrating to get things set up. But I also feel that you shouldn't be manipulating your charts a whole lot. You should, get everything set up, and then I never touch them. I hardly ever touch them. My workspace. Hardly ever touch my workspace. So, the only reason why I think that that's worth mentioning on Sierra charts is it just shows what kind of a platform they're running, right? Sierra charts are not the enthusiast traders that have a well thought out vision about like an effective way of trading and creating a tool that's most perfectly molded to the trader. Sierra charts is basically taking all of the ideas from everybody else and smashing it together in one package and just finding a spot where it can fit. And so that's why you get all of these UIs where the settings and stuff are confusing. It's because it was just little bit by little bit adding more and more features as they saw other people having them. These sorts of things tell you a lot. So can I switch to something else? Very important topic that we have to talk about today, actually. Almost forgot. Did you guys hear that Intuit is shutting down Mint? What? So Mint was like the first personal finance app. And I remember getting onto it like as soon as it was made. And I am so used to managing things with that. And come January, Mint is going to be shut down. Now, what they want, the reason they're doing this is they want to push people over to Credit Karma. And Credit Karma can still like connect to your accounts and things like that, but it doesn't have the same features in terms of budgets and all of this sort of stuff. So I am embarking on the process of discovering what is the best personal finance app alternative to Mint, right? So one of the apps that I saw out there that seemed interesting because they were claiming that they were using AI, and it was basically like this AI could connect to your account and then tell you things about your account. And so you could ask it questions like that, right? Kind of cool idea, right? I think it was called, I have a little spreadsheet to keep track of it all. Pantheon. That's what it's called. It's Pantheon. Okay. So I go to look at Pantheon. They only have an iPhone app. Okay. Now you might be thinking, well, that's no big deal. I have an iPhone, right? So that's no problem. Right? I have an Android, but maybe you have an iPhone, right? Okay. Well, here's my argument, okay? All of these applications are almost completely web apps. And the phone application is just a shell that puts you into an app. It's just a shell, but ultimately, like the pages that are loading and everything are still web apps. So if you don't have both an Android, Apple, and desktop application, like what the heck are you doing? That just shows lazy, incompetent developers, right? So I'm not going to use that app. Because them only having an iPhone app tells me something about the developers that says these guys aren't too bright. So I haven't tried it. Let's see here. What did I try? I don't think it got saved. The name of it didn't get saved, so I have to go back through and look at all these ones that are untitled and be like, oh, what's this one? What's this one? Okay, here we go. Tried Mint. Well, okay, so Mint is the one we started with, right? There's one called YNABYouNeedABudget.com. This one doesn't really connect to your account and show you how things are going quite. You have to like enter in everything, so it's not really a suitable path. There's Partheon, was the one that I was just talking about. Honeydew, I also could not. It did not have a desktop app. There was Pocket Guard, but when I tried that one, I couldn't log in. There's two more I gotta try. Quicken. Quicken has an app. I think that from what it sounds like, I'm moving over to Quicken. But I'll also try Rocket Money. I like your hair. So I was over at the mall and they convinced me to get like beard oil for my hair, and it has allowed me to let my facial hair grow out a little bit more and not look so scraggly. I'm digging it. I mean, it's gray. There's some real gray in there, but I think I look pretty good. So I think I'll keep doing that. I stream at this time literally every weekday. You will be hard pressed to find a day in the last 6 years, a weekday in the last 6 years that I didn't stream. I really like how you read so many comments. Well, frankly, if I didn't try and listen, there's only 24 people here in this stream, right? If I didn't try and interact with every one of you and to answer all of the questions and have a conversation, like what even would be the point of me being here, right? Like the advantage that you get with me is you get somebody that's been doing this for quite some time and can give you some personal attention on the stream. You know, if somebody has a good question, we can come in and spend the whole stream on that one good question if we need to. And yeah, market is dull. Yeah. And then, yeah, if it's a bad market, then we have a good reason to distract ourselves, right? Yeah. Well, the activity level of this, like the number of viewers compared to how many people speak has always been very high compared to like your usual live stream for some reason. Still haven't reached the 10-year mark, no. And I think that the ultimate goal would be to have like a 5-year profits or 5-year track record under our belt to, because I have been trading for 5 years, but I would not necessarily hold up that whole 5-year record as something to, hey, come and hire me based off, or invest money in me based off of that, right? Oh, you're the one that asks me why you keep blinking or not blink. Some people have told me in TikToks that I'm never blinking, which is probably true because, I do quick cuts. But I also have, it's not as bad as it used to be. Now I use eye drops, but I have I'm allergic to everything. So my eyes tend to be very watery and I blink a lot. But I've always found it really weird that the number of viewers is so consistent. I think that what happens is I have like 12 to 16 guys that are literally here every day. And then YouTube, if I'm below the threshold of 32, if I'm below the threshold of 32, then YouTube will show it to other people until it gets the numbers up to what it wants it to be. And then it's like once it gets to that point, YouTube doesn't share it with other people or something. Because I can't really explain why it's so incredibly consistent. It's kind of a weird thing. And part of the reason why I think that it might have to do with the YouTube algorithm is because in 2021, even before the whole GameStop thing, we were getting more viewers because YouTube was trying to push people towards viewing live streams. Now, after the GameStop fiasco, I think that YouTube decided that it hurt their retention, and so they stopped doing it. And then the numbers went back to what they were before. So that's why I think I'm mostly at the mercy of the YouTube algorithm. My social media presence isn't big enough to attract that many people on its own. I found your channel and you were streaming at the same... Oh, that's cool. Now, the one thing I got going for me is the videos on the channel. I think they're the best. I really do. Every time that I get on YouTube and it suggests a trading video to me, I look at these other trading videos and I'm like, why does YouTube recommend such trash? I know, I'm so full of myself, but I feel like that in the videos that is, especially the ones that we've posted over the last 1 or 2 years, that you're getting really solid, useful information that elucidates the nature of the market in a way that most people don't understand and that you won't see anywhere else on YouTube, and giving you real empirically backed information. And I think that they're great videos. And it's just not like the most engaging content. It's not the stuff that's like everybody and their dog wants to watch this video and watch it all the way to the end, because it's not like flashy clickbait sort of stuff, right? But if you want to learn about trading, I think it's the best place. Well, sure, a human being is smarter than an algorithm. Just game it. Well, I could game the algorithm, but ultimately, I don't feel that gaming the algorithm would be a good thing for us. You know, like if all of a sudden we were having a huge influx of people because of a certain clickbait video that I made, that would change the nature and character of the channel, wouldn't it? Because now the people that you have on the stream coming in might be a different caliber of people that aren't as serious and as interested in trading and really doing things right. It might be people that are just interested in get rich quick. So that wouldn't help us very much. And it would give, you know, then I would be incentivized to keep doing those clickbait things and to just try and grow and grow and grow and grow the ad revenue as much as possible. And so then I'm just making nothing but tripe. I'm just making trash content. So I just don't worry about that anymore. I make the video that I think is going to help you become a better trader. The thing that I can give you that will help you the most. And that's the videos that I make. And I do that with the mind of doing all of the things that I can with the video to make it as popular as possible. But I'm not going to go and do something that's like a video that's purely only for the algorithm or something like that. Best things I've learned from YouTube is from videos by random traders with 200 to 1,000 views, but it also tells me people never get deep enough to find this. Yeah. Well, and I mean, it's I think that it's also just a natural function of the market, right? The market adjusts. So if everybody knows something, it can't be an edge anymore because everybody knows it and everybody trades based off of that, which means that like social media is going to be the worst place to try and find an edge, because if it's popular on social media, that means that everybody knows about it and it's not an edge anymore. So you have to go and, you know, you might find it on social media, but it's always going to be buried. Yes. Yeah, well, the reason to that may reside with the fact if you don't even know what to Google, who can give you the answer to the question? Okay, so this is a different issue and one that I find very interesting and I've been working towards, and I don't know if it's working or not. But for me, there's a couple of terms that you want to search for, right? And so when I'm making my videos, I very much sprinkle the video with those terms and language as much as I can. Okay, so you will hear me talk about market microstructure a lot. Market microstructure. Why? Because that is the term that all of the academics use that you want to search for to find the research. Market microstructure. Right? So I made a couple of videos basically to get me to be like top ranking on market microstructure. Now, it hasn't picked up as like a huge search term, but if it ever did, should send a lot of people to our channel, right? And then what I'll do is I'll try and piggyback, right? So now what I'm trying to do is I'm trying to get people with the term smart money concepts, to get people that are looking for stuff about smart money concepts to come over here and read about market microstructure and actually understand really what's going on instead of this convoluted theory that smart money concepts people have. Nah, I went to university for computer science, so I'm a computer scientist. Not for trading. If I could go back again, I don't know. I don't know if I would change anything if I could go back, but if I did go back, it might have made sense for me to have gone into finance instead, but I don't know if it would have actually been much better for me if I'd gone into finance. Probably would just not be making as much. Right? Unless I actually got into a trading job at a bank. But if they just put me in the back office, or which is what's most likely to happen to you if you go into finance, right? Then I probably wouldn't be making as much as I do being a site reliability engineer. And being a site reliability engineer has basically given me all of the knowledge and experience I need to build my own quant firm infrastructure all on my own. I got exposed in 20. Wow, you've been around for a long time, Tiger. Really? Have you really been full-time since 2019? Yep, using smart money concept terms to manipulate them to their channel. Well, that one is not working. The YouTube algorithm is not pushing my video to people about smart money concepts. Probably because there's just too much competition. Shall we? I haven't looked at that in a while. Let me go look. This year I didn't get into college because I thought it was a waste of time, but I'm rethinking, would it be a good idea to invest myself in learning finance through college or continuing trading as I do? Yes. Well, so the big question that I would have is, how much do you like math, right? So if you like math and you're interested in getting into really advanced statistics and stuff, you go to school for quant stuff, right? That's where you can make mondo money, right? Like if you work for a quant firm in New York or London, they're going to be paying you like $300,000 a year. No joke. But it's very competitive, right? So if you hate math, then that's probably not a very good path for you, right? Is the beard really like that? Nice beard, says Francesco. Did you hear me when I was talking about it earlier, or is it just look nice and everybody's noticing now? Because I'm thinking of keeping it this way. If not, I shaved it to 1/4 of an inch. Maybe next time I'll let it be 1/2 inch. SMC stands for silly market concepts. Just trying. You're like the third person to mention it today, Francesco. Which is funny because, it was longer last Friday, but I trimmed it and it looks so very nice and clean now. Let it grow. Well, I don't think I want like a big one. So here's the thing. I am at my heart attention deficit. And so like having a beard, for instance, like I just want to sit and touch it the whole time. Which is a little not necessarily a good thing. So what will often happen is, it'll get to the point where I'm like pulling on it too much, and because of that, it kind of gets all gnarly and stuff. And that's when I usually just like shave it off, right? So because of that reason, I'm hesitant to get a really long, like, have you seen Network Chuck? I don't think I'll ever get a beard like that. I don't know if it would work very well, but having like a fairly short one, the contrast that it adds to me, I think I really like. You used to have a 1.5 to 2 inch beard back in June. I also think that I will change it as the seasons. So right now, I want to have a longer beard because I think it's going to be a very cold winter. So for one thing, my face is growing the hair more thickly than usual. The hair is darker than usual. Apparently, the bees have been storing more honey close to the brood. There's all this stuff on TikTok about this. And it's an El Nino year. So you actually are kind of likely to have some of these things. Yeah, it's going to be a wild winter, guys. Now, what a wild winter means for you, it kind of depends. But, some people in the South, you're going to have a very rainy year. And for some people up in the North, you can have a very cold year. This stuff matters. Maybe I should be an energy trader because I love the weather. As a kid, my thing was always the weather. Paid so much attention to what the weather was going to be on the news. People would always ask me what the weather was going to be. I don't like math at all. I was studying computer science in King's College, but after I finished, I didn't like what they made us learn, so I started disliking. Yeah, if that's not for you, I don't know, because I love it, right? I wish that I had been able to get deeper into math. I wish that I was better at the math, because when you get into some of these advanced concepts, I find it so difficult to keep up. And I love the coding part of it. And, your story is not uncommon, especially now. I've seen a lot of people that they go into computer science because that's kind of like where the money has been. And then once they get into it, they don't like it. That's a lot of people. You have to be the kind of person that loves math and solving problems. What's your main link? Well, when you get to where I am, you don't really have a main language anymore. But the stuff that we're working with right now is mostly TypeScript and Angular. Is kind of what I've been doing right now. I think the language I have the most experience with is C#. Because my last job was a C# shop, and because I do all of the NinjaTrader programming. I'm trying to get more into Rust, though. I don't really have the time. Been reading about watching BTIC contracts alongside ES to get a grip on how strong a trend actually. Okay. Well, I think that you will start to see the Bitcoin and ES become correlated again. Given the environment that we're anticipating having, it should probably start to see that happen again, where it's risk on and people buy both Bitcoin and the NASDAQ. That's probably a dynamic that you'll see going into the year end. Okay, so they're not quite to 24, but they are retracing that whole thing. Now, this move that we've had has moved down on not a whole lot of volume. And basically what's been happening is it was at 28. Sorry, it was at 30 for a very, very long time. And it was at 28 for a very, very long time. In fact, it was at that 28 for almost an hour before falling further. So that's not necessarily a good trade for us. Just because you're sitting in there forever and then you get 4 ticks. Okay, woohoo. There's also a little bit of liquidity catching it here as it slipped. So I'm not sure if they're going to continue to sell or not. I'm not seeing very strong correlations. Like the Japanese yen doesn't seem to be matching what the equities are doing, the treasuries. Japanese yen and treasuries correlation isn't very high. Correlation with the dollar is not very high. The S&P 500 isn't really doing anything too interesting. It's kind of within its range as well. So that is interesting because that suggests that the selling is just within the treasuries, even though we're not getting a super strong flow over there. But maybe it was in the 2-year and I didn't see it. I'm going to give a shot at C#. I think that if you were looking for you're looking for first language to pick up, that C# is probably the best one to learn on, I think. Because a lot of people will tell you Python. But the problem with Python is that Python is very different from other languages. Python is not basically there was C. And everything has basically been like, we're going to make C, but more different, right? That's why it's like C++, C#, etc., right? So, but C# is a managed memory, right? So if you go to C++ and you're a beginning coder, then you have to learn all this stuff about memory management, which is a complicated thing, right? Not for beginners. So it's better to learn on something that's managed memory, which basically means C# or Java. But then if you go to C#, you've got the Visual Studio ecosystem and the support from Microsoft and all of this stuff. And so I think it really is like the easiest way to get started and actually make stuff. I had to look on to if and as I had a Python base, I kind of understand most of the basic terms. Yeah. I mean, you can get started with Python, and there's a lot of things about Python that makes it good for learning a first language. It's just that what you learn won't be as translatable to other languages as well. But if you're only learning coding so that you can do like quant work and machine learning, then just learn Python, right? Just learn Python because that's where it's at right now. I don't think that it will ever be that way. At some point, they need to make a language that's, more geared towards it. A language that has stuff like pandas built into it. But it might be decades before that happens. Wife's bringing me the camera. Let's see here. Where is he? Let's see. Okay. What do you think about automated trading? So, it's really hard, is what I would say. It is more difficult to become a consistently profitable trader with automated trading than it is with discretionary trading. And the reason is because the market is very statistically efficient. So that doesn't mean that like inefficiencies that you can take advantage of with technicals, as you could say, doesn't mean that those aren't possible to find. It's just you really got to dig deep to find them. Whereas if you're doing discretionary trading, like the edges and the informational inefficiencies are like so abundant, it's kind of almost like the trick is knowing which ones to pay attention to and stuff, right? So it's really, really hard. And a lot of people come in with the idea of, I'm going to learn everything about moving averages and MACD and stochastics and all of these things, and then combine all of those together, and I'm going to find the profitable trading system. We call this indicator soup, right? You're probably not going to find profitability through that. So the things that I've seen that are like effective strategies, you have to get into advanced calculus, machine learning systems, Markov models, things that I don't really see indicators for. for whatever reason why. I think part of it is because you have to use these math libraries, and it's kind of hard to integrate those math libraries into the platforms. But, so basically, if you're going to go down that route, you've got to become an expert in statistics, essentially. So you basically need to have graduate, okay, so there's you go into computer science or whatever, and you get a bachelor's degree, right? But then you go past the bachelor's degree and then you're in the graduate programs, right? You need to have graduate level math, I think, to even stand a chance at it. Because the stuff, where's the book? Trades, quotes, and prices, financial markets under the microscope. There's a lot of stuff in this book that is graduate level calculus and stuff. The math is hard. If you took calculus, you can probably figure it out, but you're going to have to sit and study the book. The good thing about the book, though, is that you don't necessarily have to understand all of the math to get a real benefit from it. So that's the kind of thing I think you're up against. But that's why, again, I say, if I could go back, though, I think that I would probably like to have, worked really, really hard. Here's the thing. When I only applied to go to the University of Utah. I knew where I was going to go. I wasn't going to go to an expensive school or anything. If I could go back, I would probably try to get into Chicago or MIT or somewhere that I know that they have a good quant program and try and become the quant. Trying to learn volume trading. Well, so the issue that you're gonna run into, okay, is that smart money concepts and price action is a theory that really doesn't have any backing evidence. And once you start to understand liquidity or the stylized behaviors of liquidity and why those behaviors happen, because there are things about the market microstructure, the rules of the game, the use of the limit order book that leads to these behaviors. And once you understand those things, it kind of destroys these ideas that people have with smart money concepts. They're just not compatible, right? Because as an example, what we do here is square root law is really important. So the square root law basically says that the impact that you have scales as a square root. Oh my, this is some more. They're pushing to 24. I kind of feel a little FOMO right now, but I don't think it was a good trade for me. Okay, so square root law basically means, so what does a graph of a square root look like? It looks like this. Oh, come on. Why is it not working? There. Block sell. Okay, so that might stop them. Or not stop them, but that might make things a little tight here. Okay, come on. Wonder what the deal is. What it is that I'm running right now that's causing problems with this app that wasn't there before. It's a curve, okay? You'll get a curve, which means that if you trade 1,000 contracts and it moves the thing 10 points, then if you trade 2,000 contracts, you would think that it will move things 20 points, but it's not. It will actually only move it 15 points. It'll do it 1.5 because this is a square root law. It scales. So yeah, it keeps going up, but not as much. There's kind of an upper limit to it, right? That's why you'll see these moves that kind of they look like curves, where it's it'll sit there and do nothing at a price for forever. So it's because of the square root law. Okay. So what market practitioners will do is that they will kind of try and use this to their advantage. Is they will get the thing moving so that the square root law starts to take effect. And once the square root law starts to take effect, then they can actually put more volume into it and have not as much of an impact on it, right? So they create one of these holes, and then they kind of scale back their execution and get as much executed in that hole, right? And so they move the market, right? So what does smart money concepts and price action say? They say that like it's all predetermined, that the move is basically all just orchestrated to trick you into doing something stupid so that they can take your money. That's what they say, right? It doesn't make any sense, because how are they going to do that? They're going to have impact, right? They can. So if they're moving it down, then that means that they were selling it to move it down. So now they're short. So if you go short it and they get out, is there going to be enough of you going short for them to get out? How are they going to get paid for how much they sold it down? Right? They're basically going to have to do something to generate way more trading activity than what their movement was. And they're so much larger than the rest of the market, it doesn't really track. So what we are doing instead is we're just saying, well, can I predict what the big guy is going to do? Can I say he's going to buy today or he's going to sell today? They do. They absolutely care about your one contract, actually. I know it's funny, but like, it's like one contract here and one contract here, and you take one contract from everybody, that's 1,000 contracts. And that's like, 5% of what they have to do. They do everything that they can to get their order filled at their best price. It's kind of like they care, but they don't. But the whole thing is like this morning, okay? We've been selling the whole time, essentially. That message got through. I've been talking too much. I haven't read that earlier comment that you made about 7 minutes ago. I'll come back and get to it. They're selling. So the thing is it's just going to keep selling probably, right? So what the smart money concepts people are going to tell you is they're going to breach the low, like over here. Let's come over here to this one. And let's clear and close this. Hold on a second. I'm hoping that maybe when I get a new computer, it will maybe solve some of those problems. Gee. Okay. So what would the smart money concepts people tell you? You've got this base here. There's this big low, right? What's going to happen is they're going to breach this low, and then it's going to come up really fast. They'll retrace this area, and then you go long here and it goes up, right? That's what the smart money concepts people will tell you. But what is it doing? It's just selling. Square root law. Like that. Why? Because somebody really big is selling. Probably. Well, I don't know for sure, but I'm going to guess that it's like the Chinese or the Bank of Japan or somebody like that. The selling's coming back. Because what happens is they have to sell like 50,000 contracts. How do they do that? Because I can't if I just sold all 50,000 right then and there, then everybody would be able to tell what's going on, right? So they've got to do it in waves. They create a move like this. This is Almgren Chris is the algorithm that kind of tells them to do this, but basically they'll make a move and then they'll create this liquidity hole right here, right? And then once the liquidity has improved, then they snatch up all that liquidity again. Wait for the liquidity to improve, snatch it up again. It'll just keep going until they've traded all of the contracts. And if you know how many contracts they're going to trade, and let's just say that it's 50,000, right? Starting from here, right? There's probably at least there could be another 10,000 contracts to go, which should probably come in here. So actually, one could make the guess Hold on. I think that we might be able to make the guess that once we start to form a little bit of a hole in here, that then it will reverse. And that's just because we have some idea of why they're selling and how much they might sell. Right? Does the approach that I'm making make sense? I'm saying, here's how orders affect the market, right? So if I know what orders are going to come, I can tell you how it's going to play out. But I have to know that somebody is going to sell. I have to know that flow is going to come through. So in this instance, I think that we might be able to predict when the flow stops. Might be able to get a small trade out. Let's see. It's kind of a little late. It's kind of a little late, but we'll see. Okay, so following the square root law, how do you spell a reversal? Okay, good question. Okay, so here's something that you'll see. Okay. So there is a square root law and there is a 3/4 law. Oops. 3/4 law, like this. Okay. So the 3/4 law is essentially that once the large meta order stops, there will be a short-term mean reversion regime change that will come back like this. And it follows a 3/5 law. So basically, when you look at it, this, and this, it's actually, let me try and draw it to scale. It'll actually be more like this. So this will be half this, essentially. Or, sorry. This is 1.5 times X in terms of time. I'd have to go into the math to show you why that is, but if you go and you say, okay, when did this move stop, and then you see how long did it take for this move and how long did it take for this move, you'll find that this one is 1.5 times this one. Crazy, I know, but you'll be like just flabbergasted how consistent it is. That it's like, why do people not talk about this? Because this is like crazy consistent. Okay, but that is just what it takes for the liquidity to recover, essentially, right? Okay, but here's the thing: the liquidity, the reason it slips back into that is because this liquidity is soft. Essentially, yes, it's a rule. It's like, I would call it like the it's the 3/5 law, which is basically, it is a general statistical behavior. It's a statistical behavior that you will consistently find in basically every market data set that you look at. Okay. So when you're getting this thing right here, that happens because this liquidity is soft, right? Because we traded all of the liquidity that was through here. You know, it takes time for people to start coming in and like providing liquidity there again, right? There just needs to be time for people to come along and be like, oh, I want this price, right? So it's soft. So what that means is that in this area right here, like right after the meta order ends, is vulnerable. So if somebody comes in and does a large meta order like this, right? And then I decide to come in and, oh, actually, I disagree with you, and I want to push the market the other way. If my order is just as large as this first guy's order, my order will actually have more impact because of the damaged liquidity. And that is the reversal, right? So the way that I look for it is this. First, we need to identify a liquidity hole. 23.5 is a good candidate. What I'm looking for is some big transactions, or maybe it slipped through and get really fast, or maybe it just sit there for a while. And then that's kind of like the conditions that create the liquidity hole. And then the thing that you'll see that suggests that the liquidity hole is really taking hold is that they don't like to bid or offer very much at that price. So right now, I would say the liquidity is still pretty good at 23.5. So it's not happening. But you might get to a point where it's only like 500 contracts and they just trade back and forth across that, right? They can be, and you'll get, you know, these areas just like we had here, where it just goes sideways, right? But if you were watching the DOM at that point, you'll see that like the liquidity here at this inside price was never very much. Okay. So now we have the liquidity hole. If just as that liquidity hole is starting to form, I start to see aggressive order flow pushing the other way, then I go for those. Especially if I had a reason to think that somebody would try and make that trade because, you know, there's two sides, or, you know, they're going to contradict it or something like that, right? Then I look for the reversal. So this is called the inverse sine law. So the inverse sine law is if one meta order immediately precedes another meta order the opposite direction, the second meta order will have stronger impact, which makes these trades some of the best trades you can make, but they're rare. So that's the answer to that question. Okay, I watched a video today from Barchart about commitment of traders. What's your thoughts on COT data? Okay, so the COT reports that you get are very useful information. I don't think that they're super useful to your scalping per se, but they are things that you want to kind of track and keep note of. Now, by the time you get the data, you should basically know what it's going to say. But sometimes you're surprised. Sometimes there's nuances in there that can tell you some things. But yeah, you want to know what the positioning is. Like last week, we knew that like almost everybody was short in the treasuries. So when things flipped around, you know, you saw some pretty wild short covering from them. I think that those are the moves that often catch me off guards the most. It's because I don't expect to see such a move just based off of people covering, but sometimes it happens. This move today, I think, catching me a little bit off guard too. Well, we knew, I stated at the beginning, there's more activity here than there usually is on a Monday, so I'm a little suspicious. But then, like, the first 15 minutes were dead, and so I'm like, oh, okay, maybe it's not a thing. Or at the very least, I don't know if I want to trade it. It looks like I probably could have made $10 to $20 if I had gone short. And I almost certainly would have gone short because basically I'm always, you know, I'm looking, well, what is the actual volume doing here? Okay. Well, then I'm always going to anticipate that imbalance is going to persist. I'm going to always err on the side that imbalance persists. Now, that might change now that volatility is lower, but there was definitely somebody selling today. Which, wait, does anyone know? Well, I think the best place to get this kind of information, like informational inefficiencies, is Zero Hedge right now. And not because of the content the Zero Hedge writes, but because of the stuff that they post from the market, they repost from market analysts, like the flow traders at Goldman Sachs and stuff like that. Basically, any article that Zero Hedge posts about the research analysts at Goldman Sachs, you should read. And note that the ones that are talking about flows are the ones that are really worth listening to. There you go. Rubner and McGilligot are my favorites. Yes. Those are exactly the two best ones. McGilligot from Nomura. And then Rubner is Scott Rubner is Goldman's flow analyst. Is just a pullback in yields? There isn't any flow to back up yields. Well, I mean, I think that there is, though, all-in risk, because, I mean, look at how much we sold. If you just go from like the peak of the overnight, they've sold 70,000 contracts. That's a lot. Like on a normal day, more than 50,000 is like a big day. So somebody was definitely selling. I'm going to guess that it was a foreign nation. Maybe it could be Japan, maybe it could be China. And I am a little concerned here about the selling because I'm thinking like, Japan is going to have to sell to be able to deal with their currency. Deal with their currency. Except for, I'm not sure if it's actually Japan because there is like almost no correlation with the Japanese yen. So maybe it's actually China is dumping. Maybe China's like, oh, cool. Yields got better. We can get rid of the rest of it. I don't know. Kind of. So, I was looking at this week because a lot of the selling that we had before, we're not 100% sure what caused it. My theory is that it was foreign holders. But, there's other things. There was a lot of treasury issuance. There was some weaker economic data. The auctions have all been really weak. So what is it really going to be? And so I was looking at this week saying, okay, well, these auctions will tell you a lot because I think that the auctions will actually have fairly strong demand. And then that would kind of tell you that it's not really that there's too much issuance and there's not enough demand out there to fill the issuance. No, it's got to be something else. So then you go back to the theory that it's, like China is dumping it or something like that. So that would mean that we would expect to see fairly healthy auctions this week. Well, now what are we getting? We're getting the selling before the auctions, on the Monday. So what do you think that's which theory do you think that's most consistent with? Because my judgment here is that the activity that we're seeing right now is most consistent with somebody like China is selling their treasuries. It may even be that China wants to just completely divest themselves of treasuries. Which, I don't know. I'm thinking about this now and I'm like, well, because I'm concerned that China wants to invade Taiwan, right? And everyone was like, well, they're like 3 to 5 years away from that, right? But they were saying that in like 2019. So maybe we're getting close. To fully retrace non-farms payroll move, I would expect news like another hike and not a quiet Monday. Yeah, doing it on a Monday is a little odd. It does, so far, this is just a retracement of that move and not a push further. So, while my best theory is that it's like China is selling, let's just say it's China, okay? But another theory would be that traders are pushing back against the non-farms payroll move. And you know what? I think that one's plausible too, because the equities aren't really going down. And I think that what we just got was really good equities. But what we got, I don't think suggests that yields should come back, because the services PMIs that we got kind of suggested that prices were still being sticky. So it doesn't, kind of says to me that the amount that yields can drop is very limited. And, the treasuries gave back a lot of the gains back after that news, and maybe they're just continuing through on it. Could be as well. I would say my argument against that would be that's a lot of volume that's a very big imbalance that's come through today, if that's really what it is. But it's still a valid theory. I think the key tell here will be how is this persistent throughout the week? Because when it was China, they was coming in every day. Which now I'm saying every day now, yeah, are the gears turning now? It's like, ooh, this week could be really spicy for the treasuries, couldn't it? It's hard to trade these days because you're basically guessing on what's the flow and yeah. Well, there's no way that I ever would have guessed. I guess I could have said when we came in, I did say when I came in, maybe it will continue, but I wasn't super confident about it, right? So I'm going to say there was a possibility that I could have seen it coming, but I would say overall a flow like this is really hard to predict. It seems to me that like the sovereign wealth funds, when they come in and sell, those are the ones that are the most difficult for me to predict. I don't understand a whole lot about what they're doing at all. Maybe if I had worked at a sovereign wealth fund and I knew how those funds worked and everything, I would be able to tell that, they're going to have to sell this much. But okay, so I need to go back because I think there was some messages I missed, right? What I was talking about is when ES is moving higher and BTIC is moving higher, you have both the underlying moving up and big money willing to buy to transact at close moving up. Yeah, okay, so what you're going to find, so this is a stylized behavior of the markets that is the most curious to me, is that people are much more stingy when they are taking money out of the market than they are when they put money into the market. So when you put money into the market, it's like you don't want to miss the move, you're kind of FOMO, and so they just throw it in. Whatever price is there, they take it, right? And when they're taking money out, they tend to be really particular about what price they're getting, and they really haggle with it and all of these sorts of things, because now it's like, well, depending on which price they get, I make or lose money. So they haggle with it. And this is why trends when money is coming into the market are almost always easier to trade than trends when money is coming out of the market. When money is coming out of the market, it happens really fast, and if you miss that first initial move, then it's like crazy hard trading, right? You can just hold it, and then you can let them sell for days and days and days. But otherwise, like every trade that you make, you get stopped out of it because the flows just get crazy. Versus when they're putting money into the market, it just goes and it's easy, right? So especially when Bitcoin and the NASDAQ become correlated, those have been some of the dumbest trends I've ever seen. And when I say dumb, I mean like it just doesn't stop, right? They're just very consistent trends. Because people are putting money in and they're just consistently putting it in all day. It's like an index fund or something. Okay, so John asked me another question. Where did you learn or start learning about trading? Do you have any tutorials? So, my journey basically started like this. I got interested in the markets in 2008 when the crash happened. And so I picked up trading, and I would pull up Thinkorswim, and I would watch CNBC all day on Thinkorswim, and watch Jim Cramer and watch Fast Money every day. Okay, for years. And then I went and I got the technical analysis of stock trends. This is the classic technical analysis book. I read that book. And then I started working for a bank in technology, because by that, I was almost graduated. So I just graduated with my CS degree and said, well, I'll just go and get into a bank company and try and transition over or something like that, right? So then I worked at the bank for a long time. And when I was at the bank, I started to become interested in what is the DOM, because that just looked like the coolest thing. And, I had some experiences speaking to some traders and them telling me, well, we use these studies. I read studies every week to see if there's something that we can potentially incorporate in. A lot of the time it's things that we've already been using. We do all of our execution on the DOM. They showed me some things, but I wasn't ever able to make the transition over. So then when I came out, I knew, I wanted to learn the DOM, because that was what they suggested. So I started with the Jigsaw DOM, watching the Jigsaw videos, and the No BS day trading course, right? And then I did a lot of backtesting and things on my own. I still read the news every day, because you got to learn the macro stuff. And I don't know how, because the way that I know the macro stuff is just watching CNBC every day, reading the news every day. And that's how I learned it. But then I read Trades, Quotes, and Prices, Financial Markets Under the Microscope, which was kind of like a primer to all of the quant information we have about order flow. And then I just continued to read studies based off of that. off of what I'd learned from that. And that's how I kind of got my start. So yeah, that's several years of learning, right? And that's a lot of information that I wish I could just put all into videos and get out. But the stuff that I really feel like I can organize and do that with, I've done so. But when it comes to the macro stuff, that's hard. When it comes to the macro stuff, like my recommendation is just come in here every day and talk about it with us and ask, and if I'm not talking about the macro force that you're interested in, just ask me about it, right? And that's how we sort things out. Like the discussion that we've had about why is it selling here? Is China doing something? Could be. That's the interesting discussions that you want to get, right? Now, it's not stopping. I kind of thought, hey, they might be done here. You might get somebody try and push it back the other way. I don't think it's going to happen. So I don't think that I'm going to get a reversal trade. You might get like a small pullback sort of a trade, but I don't know if that one would even be worth it. I do talk about it. So I have a video that is called, well, the thumbnail says proven market behaviors, and then the title is something about like how stylized behavior of market microstructure or something like that. Stylized behaviors of order flow. So I talk about 5 different things that we know about order flow, that these statistical properties that are generally true. And one of them is that inverse sine law, where I talk about that. Although I kind of feel like I went into a little bit more depth on it here in this stream than I do in that video. So you have to get into it's a 3/5 law, right? So what is the other side of it? It's 2/5, which is 1.5, and that's how you get 1.5. Seems to me though like that the market's no longer moving on that. This last little push towards 22.5 is a little different, and it's no longer following the rules. So now I'm wondering, is something wild happening? Like that's not just a sovereign wealth fund that's meticulously strategized and is selling today. It's starting to look more like somebody's in trouble, Maybe you need a video just on that topic. Well, one of the things that I could do is I could start making videos with the equations and showing you with the equations how we're modeling this behavior. But I don't think, number one, that people would watch a video like that, and number two, I don't know if that would actually give you a whole lot more. Like, if you want to, basically what I'm saying is that if you want to get into that stuff, you should read the book, because that's not something that you just like casually do. It's not like you just casually watch a YouTube video and then you understand it, it's something that you have to like sit down and study. And I don't feel like I could do a very, like listening to a lecturer present about that would be really beneficial, right? But that would have to be like within the context of class and all that sort of stuff. So, which is not something, I guess it would be awesome to do that, but it's not really something that I think I could do right now. So that's why I would just recommend getting Trades, Quotes, and Prices, Financial Markets Under the Microscope by Jean-Philippe Bouchot, and reading that book and studying it. And when they come to the equations that you're interested in, to like really study the equations and make sure you understand how they were derived and so forth. What are the best trading books? Like the one that social media doesn't show? Well, I think that Trades, Quotes, and Prices is definitely the best one. Like if I was going to run a fund, and I had traders doing execution for me, I would want them to all have read that book. The other one that I think is useful to people, I think that the next one I'm going to go for is the Fooled by Randomness by Nassim Taleb. Because of the biggest issue that I see, that the thing holding the most traders back, repeat the first one, Trades, Quotes, and Prices, Financial Markets Under the Microscope. Or you could just search for Financial Markets Under the Microscope. Jean-Philippe Bouchot. I wouldn't necessarily say it's a prerequisite. Maybe some people have some of these books as prerequisites. I don't know. Which one? Trades, quotes, and prices? I don't know. It's tough rating. Anyways, the biggest thing I see holding traders back is being fooled by randomness. Essentially, they'll come in and they'll say, hey, I looked at this thing on my chart going back 5 days, and it seems like that every time I see this, that it does this, and so that must be a good strategy. And when you read Fooled by Randomness, you'll very quickly realize that, like, the amount of data that you actually need to prove something like that is usually more than you actually have, essentially. Because if you did have enough data, then people would have already have found that behavior and taken it out of the markets, right? And so retail traders, especially in the futures space, kind of are drawn to these strategies that have fat tails, that have really fat tails, that it seems like it works most of the time, and then you just blow the account in one day and you're like, what the hell, right? That's a really huge factor in the markets. And so reading Taleb's books, I think, will really save you a lot of time in terms of not wasting time on strategies that probably aren't going to do much for you. I needed dummies guides to trades, quotes, and prices. They went way over my head. It's not simple. It's also a book that I think I read 3 or 4 times. One of the things I'll tell you, because I can totally see people going and reading that book and getting halfway through it and then like not being able to do it anymore, right? But it's kind of like the whole thing together. Like he's setting it up, and then you get to the final chapters, and you actually get to the big takeaways. What are the big takeaways? Market is more statistically efficient than it is informationally efficient. It's not very informationally efficient at all, but it is extremely statistically efficient, and that's just because of how an order book works. There's just not enough liquidity for the people that are informed to be able to trade into, and they move the market too much, and so you just never get anywhere close to what, like, quote, fundamental value would be, right? And then once you understand that stuff, you go back and you read it, and like all of the pieces fit together. So it's one of those books that I really think you just trudge through it, man. Like, finish the book. Whatever you do, finish the book. Pay really close attention to the summaries at the end, which like the main takeaways, because that's really the important information. I want to dabble with Linux on an old laptop. Which OS do you recommend? So if you want to mess with, so first thing is I'm really not too I'm not too enthralled by Linux desktop. Like you can do the whole thing where you set it up on your desktop and you use GNOME and KDE and try all of their different. I think that Linux is all about the command line and running services and stuff on the command line. So what I would recommend, instead of like installing it on there, is just installing Windows Subsystem for Linux, which is the thing Microsoft has made for you to be able to run a Linux terminal on your machine. Install Windows Subsystem for Linux, and probably the easiest one to use and get started with is Ubuntu, because there's just more documentation and so forth with Ubuntu. I mean, if you want to be hardcore, you can go and do Arch Linux or Slackware or something like that. But I don't think that there's really a whole lot of measurable stuff you'd be doing with those distributions that you wouldn't be doing with Ubuntu. So that's, if you want to learn Linux, that's the approach that I would take. I would also, if you're going to mess around with stuff like that, I would focus a lot on learning the shell. So this is a funny thing about Linux is that, like there's the Linux kernel, and then everything else is small pieces that run on top of the kernel. In Windows, all of that is like one big monolithic thing. But in Linux, it's modules. And so you can choose, like you take the kernel, but then you can pick and choose which shell you want to use, for instance, right? Now, the two main shells are bash and what's the other one? I'm sorry. Top Linux shells. Isn't it K shell or something like that? Oh, there's TSH. But bash is by far the most popular, right? Yeah, bash and ZSH. They're very, very similar, right? Learning about the shell itself can actually be like help you the most. So like if that's where like the detailed stuff, like the people that really understand Linux deeply, like a lot of it is because they understand the shell. But then you can get into like funky stuff, like you can install a different shell that works completely differently. And then it's like learning a completely different thing. And there are some shells that are more modern that do some really sweet stuff, actually. Bank of Japan can't sell U.S. Treasuries to fund their intervention that would only support the dollar as yields rise, and this hurts the yen, says All in Risk. Maybe. So I tell you what, it seems to me that like the Japanese selling treasuries over here and would hurt them. But we do know that they have done it. There have been some days where we saw really crazy selling like this, and we later found out that it was the Bank of Japan selling them. And that basically like the Bank of Japan came in, sold the treasuries, turned around and bought their currency with those profits and to support the currency because they were more concerned about keeping the currency in a good spot and reducing volatility in the currency than they were about the interest rates, which I don't know how that works out, but I'm just saying what we know has happened. Okay. But I'm also kind of the mind that maybe it is China, because the last data that we got kind of suggested that China was responsible for a considerable amount of the selling that we've seen since the summer. And one of the things that leads me to believe that it's got to be foreign nations doing it is that you'll see it come out every day, right? Like we're all thinking, oh yeah, economic data is weak, things are turning around, yields should come back down, right? And then they'll sell every day that week, and you're like, what the heck? And nobody was expecting that. What is that? Well, that's got to be a foreign nation doing it. Because that's somebody that's big enough that their selling is going to take weeks. And the thing that's got me like all super focused on that particular theory today is because if that's what's going, then it could be that we get another like 4 out of 5 days are selling. I've got lots of opinions on the bond market. I think that the amount of downside that you have in yields, let's say, like I don't think that yields can come back too much right now. Even if we were start to get into a full-blown recession coming, I don't know if treasuries would be able to come back a whole lot. So that's the big thing for me. And I think that what you might see here is like the market and the Federal Reserve will kind of be dovish and thinking, we're weakening, etc. We're at the end of the cycle, right? So financial conditions will ease, and then they'll say, oh, financial conditions are too easy. That could potentially lead to inflation. So then the treasuries tighten them back up again. And you might see it bounce back and forth here like this for several months. That's another possibility. I don't know. I didn't trade it today, mostly because it's Monday, but there was a lot more opportunity in it today than I anticipated. So I guess this pullback is only a 10 ticks, which is about like an average trade for me. So. And it also kind of like, I remember I was saying like, they're going to come down here and then maybe we will get the pullback because probably they're done. Well, it seems like I was right, but they kind of did a little bit of shenanigans first before they did it, didn't they? Because there was a second push to try and push lower that failed, and then they came up. So I think that even though I was pretty good on understanding what was going on when it was happening, don't think I had a good enough handle on it to really have a super high probability of having made money in that. Many traders out that emphasize news and macro news, thinking, I think you meant macro news, thinking such news are going to yield big moves. They disregard the structure within the range, put too much emphasis. Well, I think that, like there's the like geopolitical developments and that sort of stuff. Those might be kind of the big ones that you're talking about. When really, I think a lot of the stuff that you want to be looking to is like, dealer gamma went from negative to positive last Friday. That's really important. And that's something that like most retail traders don't pay attention to. And you have to combine all of the things together, because you might have one really big force over here and then like 5 tiny forces that equalize it, In order to be able to predict the order flow, you have to go through all of the things that that can possibly predict the order flow and say, what are they going to be? And then combine it together to get an answer and say, okay, is there a strong enough imbalance between those forces that I'm really positive that we're going to have a buy day or a sell day? So you might mean that. Now, there's also things where it's like, sometimes we're stuck in a range and you can trade the both sides of the range, but I tell you what, man, you trading treasuries, you'll very quickly learn how difficult that game is, right? Because the treasuries will, like, when they're stuck in range, they're stuck. And it's like, you can't even get a tick. Like, you're waiting here for an hour to get a tick filled, right? And then you turn around and you get filled and it goes right through you. So it's a tough game if you don't actually have something to predict the flows. Just want your insight on the footprint chart and why you don't incorporate it with the DOM. Well, so yeah, that's totally fine. I understand what you're asking. So the footprint chart is a really great tool to see what happened after the fact. Okay. I don't really need it while I'm trading here because I'm watching the DOM the whole time and I saw how it played out on the DOM. And there are things that I can see on the DOM that I can't see things I can see on the DOM that you just can't see in the footprint chart, right? Especially some of these things about like the latent liquidity, like every time it ticks up, how much did it take and that sort of thing. Now, the other thing about the footprint chart, though, is that there are footprint strategies, right? People will talk about, okay, when you get an area where there's an imbalance here on the diagonal, that could be a signal. When you get unfinished auctions, that's a signal. And the sort of like technical signals that people come up with from the footprint chart, I've never seen any data to suggest that they have any efficacy. So it's again, I would recommend that you avoid technical analysis in all of its forms. And what I mean by technical analysis is you're waiting for some strict pattern to appear in the market. And when you see that specific pattern occur, you then take a trade there with a given risk reward and try and make money from it. Okay. I would avoid technical analysis in all of its forms. Basically, the idea that any kind of pattern in the market is effective at predicting future orders is extremely dubious. And so you can come in and you can apply technical analysis to order flow too, right? What I'm trying to do is different. What I'm trying to do is I'm saying, if I go and I send 10,000 contracts into the market, this is what would happen. We can predict very effectively what would happen, but it's not because of some pattern that we saw in the prices, because we have 10,000 contracts and we're going to buy it and we know that those are going to come through. And what impact is that going to have on the market, right? So with that is the technical information. So stylized behaviors of order flow. The thing that's missing for a trade is we need to actually know that one of those orders are going to come through. There are some situations where we can know that. And that's why I try and be a sniper. I don't think I've been very good at it over the last quarter. It's been difficult. It's been tight. It's, haven't been very competitive. But sometimes sometimes you're on and sometimes you're not. And it will change from day to day. But that's a different thing, right? I'm trying to predict future orders. I'm not looking for a pattern, per se. I mean, there are patterns, but like patterns are the results, not triggers, right? And I guess that's the thing that defines technical analysis to me, is the use of patterns as triggers to enter trades. I would just avoid that altogether. And you will see that with any tool. You'll see there are people that try to do technical analysis with the DOM. There's a big order here, and then I saw this, and this is the pattern, and this is the trade that you take. The market is very statistically efficient, guys. I still got 10 minutes, but you guys have kept me. Oftentimes, you guys will ask me a ton of questions like the first hour, and then we'll kind of like focus down and talk about something different. But today we had a little political discussion to start, and then you just started asking me lots of good questions. I mean, they're questions I've answered before mostly, but they're good questions I like talking about. What is your indicator? Well, so I have things that I guess you could call indicators, but when I go into them, I think you'll realize that they're really not indicators in the way that most people are using, most people think of as indicators, okay? So like the most important indicator that I have is actually this right here at the bottom of my screen. Do you see that? What is that indicator? That indicator is synthetic dollar index. So I am taking the price of all of the currency futures and using the calculation to calculate the dollar index to. Now, this doesn't match the dollar index perfectly because some of these futures, there's a basis difference, and so it's different from what the actual FX rates are. Okay, but it tracks it pretty much equally, and so I can see, is the dollar rising or falling, and what does that tell me about what the macro environment is, and where's the money coming to and from? Are the treasuries moving on their own, or are they being driven by a change in the dollar? Right? So is that really an indicator? I mean, it's not an indicator in the way that like a moving average or an RSI is, right? But it is like I had to use an indicator to put it on my chart, right? Okay, that's the most important one. And these are all, by the way, part of my suite that you can buy for $100 lifetime license at speculatorset.com, and you can try it for free for 2 weeks to see, how you feel about them. Okay. Next most important one. Spread. So this is essentially there are ratios, but I'm looking at the difference in change between the 5-year and the 10-year, or this one is the difference between the 2-year and the 10-year. And so now I can see, okay, which way are the rates going? They're steepening. Well, no, I don't know. I don't know if they're completely steepening. But as of late, they've been steepening, which kind of suggests that the market thinks that we're close to peak rates. Okay. That can also tell me things like, on this latest move, it seems that the 10-year moved more than the 30-year did. Right. So like if I'm going to buy, I'd rather buy in the 10. And if I'm going to sell, I'd rather sell in the 30. Right. So that's not the same thing as your RSI indicator, which is like a pattern to say, we've been selling this much, and here is the point at which we're oversold, and maybe you can buy, or maybe you can sell, or whatever the deal is, right? Nah, but it's telling me something about the market. It's not like a predictive signal, but it is something quantitative that matters, right? So it's an indicator, but it's not really an indicator, right? Okay. Next one, this one is not part of my indicator suite, but cumulative delta. Well, I have a cumulative delta, but that cumulative delta is mostly for if you're trying to use it on stocks, right? What are the orders actually doing? Are they buying or selling? Is it very auto-correlated, which is to say, like, how much of a straight line is it? Okay, well, they're selling. That means if I'm seeing strong auto-correlated order flow in one direction, I'm much more likely to take a trade. Those are like the most valuable indicators I have. Next one is volatility. So if I come to a daily chart, here's my multi-ATR, and basically this is average true range on a daily chart with range behind it, and I can change what the ATR is expressed in. So it's in this chart, it's expressed in terms of number of ticks. So it's saying that the average true range is about 54 ticks a day, right? Now remember, volatility tends to cluster. That's a stylized behavior that we know. It's like if you get a really big day like that, right, then you're likely to get a bunch of big days like that. That's volatility clustering, right? We've gotten a little bit of volatility clustering again, so it kind of makes me think that we might get some big moves this week still. And then after that, we should expect volatility to contract significantly. Okay, so is it an indicator the way it's not an RSI? This is a little bit more like a traditional indicator, but how am I using it? I'm just using it to keep track of what the volatility in the market is so that I know how much, it might move in a day, what's kind of normal and reasonable. I also do have some moving averages on this chart, just because a lot of people care about that 50, 100, and 200 day moving average. So it's kind of curious to me that we did get to a 200 day moving average and are seemingly bouncing off of it. I don't think I can predict what it's going to do from here based off of that, but it is interesting, isn't it? Right? Okay, so those are indicators. I'll give you one other indicator, and this is an indicator that is like an indicator and you can use, but every automated strategy that I've ever made, I tried adding this indicator as a filter and found that it helped the efficacy of the strategy, and it is R squared. And this is something I can give you on the technical analysis side that you're not going to see much elsewhere. And basically, what is this doing? Because I think what a lot of people do is they say, okay, we're moving down and it's coming back, but you know what? Like, it's not like really strongly moving down. It's like, yeah, there's like this trend, but like how strong of a trend is it? And how can you say how much? Like is trading with the trend actually working? And so that's where there's this whole thing that's like, yeah, I can have this indicator that tells me we're overbought or oversold, but I'm ignoring it in this situation because I can tell just from looking at the price that it's not actually very trendy, that it's very much stuck in a range, and I would rather play against the range, right? So how can I quantify that? R squared. So what R squared is like a more general term to say like how predictive is this thing of something else. So if I have a strategy and it has a very high R factor, that means that my indicator is accounting for like 90%, is being able to explain 90% of the movement, right? So what R squared does is it says, how much does the past trend tell you about what the future trend is going to be? How predictive it is. So basically it's autocorrelation. So the more that a move is just a straight line like this, or let's say it's a straight line like this going down the other way, right? The more that it's a trend, the higher R squared will be. So I typically, if I'm seeing very high levels of R squared, it's staying there for a long time, then I want to take a trend. That's not what it's doing today, is it? R squared is below 0.2, and it's staying there for a really long time, which says to me the S&P 500 is a range-bound market this morning, right? So I don't take a trend trade until like at least above 0.5, if not 0.8. And that is a really, really effective filter. That one's included in NinjaTrader. So that's indicators, right? So you see, I mean, I have indicators already, indicators, but like we're not using technical analysis on them, which is to say we're not using patterns as entry signals. On that note, how can you help me understand how the dollar index and the treasury yield affect the futures market? Okay, so the first thing is almost everything has some sort of correlation with the dollar. But what generally is happening in our day and age is when the dollar is moving up, everything else is moving down. And when the dollar is moving down, everything else is moving up. So basically, the dollar is inversely correlated to everything else. Right? Now, why is that? Also, for treasuries, the stronger, the higher the yield is. Okay, so the more that the treasuries are selling and the higher the yield is, the more people might want to move over to dollars in order to take advantage of that higher yield. And so that's why they've had an inverse correlation as of lately. It's not always that case, because sometimes you will see the dollar move up and the treasuries move up. That means that there's risk aversion in the market, that people are afraid of a market collapse, and they're trying to move into safe assets like the dollar and treasuries. Okay. Getting the camera here again. She's taking the baby to preschool. Now with equities, it's kind of a little bit of a different story. Okay. The weaker the dollar is, the easier it is to make money exporting things, right? Weaker currency means you can export more and vice versa. So a weaker dollar basically means, well, and not only that, but if the dollar is weak and the value of your asset's not changing, but the dollars are just weak, that just means that the price of the asset in dollars is going to go up, right? So you can have these things where the dollar moves down and the equities go up, even though, like, if you were to value the S&P 500 in terms of gold, you would see like no change, right? Okay, so there's two things versus like the how does the currency affect the economy? Having a strong currency makes it harder to export, but it also means that you can consume better. And then the other side of it, which is the change in dollars just affects the assets, and there's correlations because of that. Right. So those are two things. Those are, I just gave you a bunch of different kind of correlations with some assets. Because the thing is that sometimes those correlations will flip and so forth. What's your position? Well, so I don't have a trade on right now, but the trade that we had kind of talked about and decided not to do was basically to buy it down here for a pullback, because I thought that probably that meta order was done. So we did get that pullback. I think that I would be, if I had taken that trade, and I'm not saying, oh, if you're in a position, this is what you should do, right? I'm just saying, for me, the way that I trade, I would probably be taking my profits right now. This is when I shut the stream down, so I would be taking my profits right now. But I didn't take it. It was a Monday. Didn't really see it coming. Well, didn't feel confident in it. Well, I'm glad that you enjoyed it. I'm here every day, guys. So. And, there's a lot of new people today. Like Min, MK, that's the name I don't recognize. Joan Van Beek, you've been around for a little while, yeah. But, it's like the same group of guys here every day. It's lots of new people come in on Monday, but we got the same group of guys here every day. So come here. I start at 8:30 Eastern time, basically. So I'm here from 8:30 to 11 Eastern time every day. And if you look in the video description, there's a link that's like the permanent live stream URL, which I think is just something like speculator/live or something like that. But I would bookmark that URL. That way, every day you come in, you can just click that link and come straight to my stream, instead of having to go to my channel and because YouTube won't always show it to you, right? Not here on Sunday, but Monday through Friday, every weekday I'm here. Oh, what was your question? Oh, what's your average P&L every month? I wasn't avoiding your question. It's only been 1 minute, bro. So on a good month, I could maybe make $50. Yeah. Super, super successful rich trader, right? But we trade micro futures like 50 ticks net for the month. This is pretty good. Trading one contract. And that, you know, pays the data fees. So my goal is basically pay for the data and all of that stuff, right? Yeah. Dead serious. So here's the thing. I could come in here and I could take big risks and I could probably make $5,000 a day, right? If I went and did a couple of degenerate things and borrowed a little bit of money and so forth, I could probably trade a big enough size that on treasuries I could be coming out with like $5,000 a day sometimes, right? And then you would probably all love it, right? You would all be like, oh, this guy is trading big size. He's making tons of money. I really want to watch this guy because he's making money. And if he's making money, I can follow him. I'll make money. But here's the thing. Two things. Number one, that would attract a lot of people that are here for just the money. And that's not what I'm trying to do, right? We're trying to work together to develop Edge. And so I need people that are serious and are going to trade every day consistently for years and are really interested in doing the research and understanding the quant stuff and doing like the really deep analysis of what's going on in the macro and stuff like that. So I don't care about generating a ton of information to bring tons of people in. If I brought tons of people into the stream and we had like 1,000 people on the stream every day, that would kind of like work against me with what I'm trying to do, right? And number two is people would start trading, you know, would start reacting to my trading, so that can kind of reduce the edge. So I'm not looking to make a ton from it. I have a day job. I make really good money with my day job now, right? So I don't really, you know. Now, I think in the future we will start taking on more risks. But yes, I trade very small, and I trade smaller than I probably need to on purpose. Now, you know, it's not really a capital issue. The one of the big things holding me back right now, though, is that I'm not 100% focused, to be fair with you, right? Like, most of my attention is spent with these toddlers. And, you know, I know it sounds silly because they're not there when I'm trading, but it does affect you, right? That's a lot of my attention and so forth. And so keeping everything consistent, but you know, like I said, I have a really nice day job, so I could start taking on more risk, but there's some other things that I'm doing with that money right now. And that's the other thing, is just to be fair with you guys, trading, and especially day trading, is like a great wealth enhancer, but it's not a very good wealth builder, right? So when I get money, first thing I do is I put it in my IRA and my 401k. And you should too, okay? Like, there's this whole idea that like you're going to trade and that's what's going to make you a millionaire. Extremely unlikely to happen, right? I would only do this if, you know, it's a fun hobby to you and like you really enjoy it just for what it is, and you would still do it even if you didn't make any money from it. Then this is maybe for you. But you know, I'm investing money in other things that I know, you know, like if your goal is what is the word that we use? Like to make the most money, you should probably just buy and hold, right? You'll probably make more money. What you do in futures is, or day trading is supposed to be taking a smaller reward in exchange for more consistency. That's why you day trade, right? So, well, he probably doesn't like the 401k because it's locked in there, right? But you work for a company, you get a 401k match. So you should always max out the contribution match. And the tax advantages are enough that it is the most valuable way to invest. It just kind of sucks that you can't use it until you're 72, right? That's how long have I been trading? So I first started like quote trading in 2008 after the financial crisis, but I've been doing the futures trading since about 2016. When Lambo. When Garlic Coin takes off, then I can have a Lambo. I wouldn't buy a Lambo though. I would sit here. I would go and buy, a Corolla, another Corolla. I don't know. I guess I wouldn't buy a car because I'd already have the car that I want. But maybe if Ferrari came over and were like, Seth, we've heard of you. We really like you. We want you to buy one of our cars, and maybe they could talk me into it when I'm a multimillionaire. Every time they interview him, his phrase is "that is good." Well, that's because, yeah, I would take a lot of the things that guy says with a grain of salt, especially when it comes to like interest rates and inflation and stuff, because he's been like dead wrong on a lot of these things. But the thing that you got to understand about them is he's talking about taking on debt to buy assets, which basically means taking on debt to buy real estate or a small business, but mostly real estate, right? He made his money in real estate, right? So what he's really saying is take on a lot of mortgages and rent them out. Cool. It actually is a great way to build wealth. Just not right now because the price of houses is so high. The cap rate that you get back out of it, you might as well just buy treasuries. You can get 5% from your treasuries versus 5% cap rate from investing. Now you can get leverage. You can get leverage with the housing, maybe, but not all of you might have access to that. So it's kind of, I don't know if that one helps you too much right now or not. But that's why they talk about those things. But the larger principle is correct. If you have extra money, you need to spend it first on assets. And if you are going to spend it on expendable things, you need to spend it on expendable things that make you more effective, right? Like if you have a really crappy mattress and you can't sleep at night, then it's a good investment to buy in a good mattress. And that's not an asset that, necessarily brings you back more money. But if it's making you more effective, then it becomes an asset, right? Buying a new computer so that I can do more serious analysis, right? That's kind of an investment that turns something that is essentially what would you say? Something that is consumed, essentially, right? The value of it goes down over time. The value of computers goes down over time, like big time, right? But if it's making you more effective in your day-to-day, then it's worth it. Okay. So I think MK probably just left. He's like, only $50. Good. Those are exactly the kind of people that don't want around. So anyways, I'm like way past my time. So let's come in here and put change the title. Yields surprise by, how can I say this? Surprise bond selling retraces non-farms gains. Let's put that. Trading for 5 years, live every day. Why not bump up? Well, like I said, I don't really actually care about the money. But I also, to be honest with you, every time that I start to like size it up, it doesn't work out very well for me. So like the thing is, like right now, I don't think would be a good time for me to size up because I haven't been trading very well the last month or two. Really haven't. October was rough. I didn't do very well in October. I did really, really well from like August of last year until the summer, and then the summer I, treaded water. But then like September, October came along and didn't do very well. So I think that we still have some things to eke out. But I guess here's the thing that I didn't say. I don't want people to follow me because I've made a ton of money or something like that. I want people to follow the empirical evidence, right? Like I mentioned, there's like the Trades, Quotes, and Prices book. You go into that at the end of every chapter, there's all these references to studies and stuff. Okay, like stuff that's like peer-reviewed quantitative research. That's what I want you to focus on. Don't just follow people because because I could just lie and say, oh, I'm making thousands of dollars a day, and then lots of people would want to follow me, right? But I want you to follow the empirical evidence. And so by telling you, because I tell you, here's the other thing. Like when I am doing really well, I usually don't tell you guys, right? I want you to follow the empirical evidence instead of, and that's the person that I'm trying to attract, is the person that's interested in the research. Yeah, as I said, it doesn't matter because the vast amount of knowledge you just provided when there, exactly. There you go. But, we will size up at some point. But there's the other thing. Think long term. I'm thinking long term, right? Maybe 5 years from now we will be trading really huge size like that. But right now is not the time. So I've got too many other things going on, but just not 100%. I just don't feel like I'm in 100% the space I need to be to really be taking on big risk, unfortunately. But we'll get there. Kids will get a little bit older, get more established in my current role at work, and then I can kind of focus on, because it's a lot of emotional energy when you're taking on risk, right? Okay, I really got to go though. I'll see you guys tomorrow. Stay excellent, team.